from your perch, where do you see financial services evolving as pertaining to fintech? What do you see as the major changes that people here in Washington, D.C., and frankly, throughout the country really need to be aware of as to what's coming down the pike sooner rather than later to impact the way in which financial services are being conducted?
Yeah. Well, first of all, thanks everybody for being here. It's a pleasure to be with you. I would say we're probably going to see more changes in the financial services industry than we've seen over the last 30 or 40 years as we look ahead the next 5 years. Everybody talks a lot about the impact of mobile on various industries. I don't think you can underestimate how dramatic that will be when you think about financial services. There are two macro trends that are happening. One is the digitization of money. It's happening everywhere around the world. I just got back from China a couple of weeks ago. We can talk a little bit about what's going on there, but it's actually quite amazing. I just was up on stage with the finance minister from India. They have an incredibly well thought through, comprehensive plan around digital payments, starting almost as a software stack at the very bottom with ID and moving all the way up through application layers. And it's very impressive, very audacious, it's very bold, but they're very serious about digital India. I think here in the US, we're pretty well far behind those other countries when it comes to digital payments. And I think you've got now maybe 5 or 6 billion people in the world with mobile connectivity. Think about that really as everybody in the world will have all the power of a bank branch in the palm of their hands as we look forward, connected to software platforms with really connectivity that will have high speed, will be very inexpensive, and that will dramatically change the way we think about managing and moving money, the way we think about data and information and the services we can provide. And I think what's capable will radically shift. And I'm sure we'll talk about that. I don't want to take up all the time in the first question, but there's a ton of very interesting things going on right now in financial services and fintech, or the combination of technology and financial services coming together through the advent of mobile and platforms will be what drives that.
Well, that was a very meaty answer, and there are a lot of questions that I am going to get to, particularly when comparing the United States to other parts of the world and what the United States can do to catch up. But just before jumping into that conversation, there are a lot of things going on, and where does PayPal and how does it situate itself? On the one hand, PayPal is a dominant financial services player, but it's still a young company. And is the view that it is an upstart and an incumbent? Does it depend on the industry and the sector in which you're participating? How ultimately does PayPal's position impact its own corporate strategy in terms of, again, the next steps in given these developments in the financial services industry?
Mm-hmm. I think for all of us, we're in the very, very beginning innings of what's going to play out over the next 5 or maybe 10 years. Digital payments is nascent, even though it is exploding all over, and there's no stopping that from happening. I think it's as big as a $100 trillion industry, and so I wouldn't call any company dominant in that. We maybe have 1% market share of it, so I wouldn't call ourselves dominant. We do have 210 million people using the platform, about 17 million merchants we've kind of reinvented ourselves. I think if you look at the history of American business, almost every business goes out of business, and it's happening faster and faster. You look at the S&P 500, the average lifespan on the S&P 500, in the 1930s, it was something like 73 years was the average lifespan. Last year, the average lifespan on the S&P 500 was 12 years. So there's a radical shift going on. If you look at the Fortune 100 from 50 years ago, there's something like 16 of them left. And so it doesn't matter how big you are. It doesn't matter if you think you've got it pretty well nailed. Things are changing so quickly, you constantly need to reinvent yourselves. And that could be technology companies as well as it is retailers. I want to talk about retail at some point because I'm worried about the retail sector is going through a secular change right now, being driven by mobile. That is going to radically change what Main Street looks like, and job creation and a number of things. And I want to talk about small businesses. But I also think we've got 2 billion people in the world right now that live outside the mainstream of financial services. 2 billion people. Here in the US, at a minimum, 70 million, maybe closer to 100 million, who spend time in lines trying to do basic transactions, spend a tremendous amount of money, just changing currency from one form to another. Not any value add, just changing currency from one form to another. And if we can figure out how do we use technology to more democratize financial services, to make managing and moving money a right for all citizens, not a privilege for the more affluent, and democratize platforms and capabilities for small business to compete, which is an engine of growth for neighborhoods around the world. I think that's a noble goal for the financial services industry to think about. How do we drive financial health? How do we help the capabilities of smaller businesses to compete against the likes of an Amazon?
Well, that's very interesting. On the one hand, you do have increasing disintermediation of these established players in the payment space. You have lots of new upstart firms that are trying to make financial transactions and payments much more efficient. But as you said, also on the retail end, bricks and mortar businesses are finding themselves also facing new challenges and new upstarts and faced with the likelihood of being forced to redefine exactly who and what they are. Maybe I think it's particularly important since we have some policymakers here in the room. Do you think you could just sort of tie the two together to explain what really is then the relationship between, because I think a lot of people don't really think through, well, what is the direct relationship between the financial economy and the real economy and the changes that take place in terms of how people make payments and how they receive payments and the difficulty with which they can receive payment or consideration for whatever they're doing. And thinking through, well, how does this enable people to either start businesses? How does this challenge and force even established businesses to make themselves better? How exactly is it that these kinds of services and the changes, whether it be digitalization, whether or not it be new financial markets infrastructure, how does that impact, again, these changes that we're seeing on the retail end?
Okay, like 700 questions in there. So
I'm a law professor. That's all I do.
I probably should like in a long tradition go like, well, what do you think about those things? But let me try and answer a couple of them. First of all, let me talk about retail and what's really happening in that world. There are like 1,200 enclosed malls in the U.S. right now. A third of them are either dead or dying at this moment. That's just the beginning of what's going to happen with retail. I was just in I won't name the store because it's probably a customer of ours, but I went in there and they didn't have any of the things that I really wanted. and they had a part of what I wanted, but I needed other equipment to supplement it. They didn't have that. And I walked out without buying anything. I thought to myself, why am I even here? I mean, to what end did I come to this store where I probably could have gone online and gotten it there the next day? You go to China and you go into a supermarket. There are no carts in the supermarket. There's no carts at all. You tap your phone. It's all done by QR codes. There's not a mishmash of point of sale technology like there is here. You scan it. You say exactly what you want. Half the store is basically logistics. It's behind the showcase of the store, but it's all your package being packaged up, going through automation and everything in the back happening. And then within a half an hour, it's delivered to your home, within a half an hour. And then when you're home and you run out, you don't have to go back to the store. You basically just order. So there used to be a distinction in retail between what people thought about as online and offline. And in most retailers, they used to have separate departments, online, offline. Mobile is blurring, if not eliminating, the distinction between online and offline. And in the world that I live in Silicon Valley, it's a world where your weapon of choice is algorithms. That's the weapon of choice, right? And the weapon is fed by ammunition called data. And the more data and information you have, the more powerful the algorithm is to make choices. The problem is, for small businesses, they don't have all that data and information. Remember, if I'm trying to make a personalized recommendation for you, the more information I have with you, the more accurate my recommendations can be for you. The more I can get you what you want when you need it. So we've got to figure out, how do we extend data and democratization of capabilities to small businesses to allow them to compete in the era of mobile phones. Mobile phones are going to make personalization and value propositions for retailers radically different from what it is today. I was talking to the CEO of McDonald's the other day, and in the US, most people pay for the McDonald's with cash. They come in and they walk out. There's no establishment of relationship with that individual. He wants to move that so that you can actually create a value proposition with that mobile phone. You can order ahead. You don't have to be at the line. They deliver out to the curb when you pull up, so you don't have to wait in that line around, that they can, if you always like whatever, a cheeseburger, they can give you a discount on a cheese, whatever it may be. But it will fundamentally change the relationships retailers have with consumers. And if Main Street and small businesses aren't able to compete with that, then you will have the bigger platform companies like an Amazon really start to eat away at what happens. And I knew Amazon was already the bigger competitor that they had, but they always thought to themselves, even though they knew differently, but in their heart, they always felt online is separate from offline. And online is only 10 to 12% of retail sales. When Amazon bought Whole Foods, it brought it right into everybody's face that actually, no, there isn't going to be a separation here, and you really need to rethink that value proposition. So you can do it. Like, we've opened up our platform. We're a fully open platform with APIs that small businesses can take advantage of. But let me give you one example. You're a small business and you need working capital. Since the Great Recession, to small businesses, working capital loans have gone down. They've come back up, but they're nowhere near what they were before. We have a product where we don't even look at a FICO score. We just look at data and information we have with that individual business. And we then extend working capital loans to small businesses. We've extended over $3 billion, again, based on information and data we have. Two interesting facts. 25% of our loans, or of our working capital lending, has gone into the 3% of counties where 10 or more banks have closed branches. So that's a really interesting thing to think about, because there are these banking deserts that are coming up. Where are they? They're always in low to moderate income neighborhoods, always. By the way, that's not like a weird thing that a bank's doing. They need X amount of deposits to be profitable with a physical infrastructure. Digital infrastructure, you don't need that. The other fact is that when somebody takes out a working capital loan from us, their average business grows after that by 22% versus the control group by less than 2%. And if you think about small businesses, about being the engine of job creation, and some amount of maybe financial health for those small business owners, their ability to hire maybe somebody else, this is crucial to be able to go do. We need to harness the use of technology and information and data to extend it to communities that are increasingly left out of the mainstream. And as I mentioned, you've got all of these consumers that are also left out of the mainstream that can be helped in similar ways, because they spend something like 10% of their disposable income on unnecessary fees and interest rates, on just changing currency, and then they wait in line maybe hours in a day to cash a check, to pay a bill. And so this can be changed completely and really change the direction, not just of our country, but around the world. And I think of this, finish up, then I'll stop, I'm sorry. This isn't a red issue or a blue issue. I really think about this sort of driving financial health and what we're trying to do in the small business community is a red, white, and blue issue. This is something that should be bipartisan and should be a combination of the public, private, academia coming together to figure out how can we solve this issue, because there's a lot of issues around it, but I actually think it's solvable, and there are a lot of countries around the world that are role models and are giving me hope that we can replicate that here as well.
Just fascinating, and you've mentioned obviously the public sector and the private sector. Just two quick questions. Was this a decision by you, by the company, where you identified a potential opportunity to do well by doing good, or do you think that, particularly when you look at other firms here in the United States, to get to this point where we can modernize and democratize our financial services for people who need them, is this something that requires certain kinds of incentives or just a little bit of vision? How is it that you found yourself in this space, and do you think others can do the same?
First of all, I don't think there's any disconnect between a company doing good and doing well from a financial results perspective. I think being a customer champion is like jacks are better in the poker game for any company to be an enduring great company over the long term. I fundamentally believe that, even if that means challenging your business model and doing the right thing for the consumer or the whatever constituency you serve. I do think technology is moving very quickly, and that the public and private sectors need to work closely together on this. I'm just the incoming co-chair of the Financial Inclusion Task Force on the World Economic Forum. So I've had the chance to talk to regulators around the world. Pretty good relationship. PayPal operates in 200 countries around the world, so we talk to regulators all the time in every single country, and every country has different needs and specific regulations. But at the heart of it, it's basically making sure that there's safeness and soundness, which makes a ton of sense to me, and also that businesses, small businesses and consumers truly understand what it is that the service is offering, and it's very transparent. It makes a ton of sense to me as well. In most governments around the world, can't say everyone, but I'm going to say the overwhelming majority. I mean, we're more similar than different in that we want the best for our citizens. That financial health and that security is pretty universal across the world. I mean, I meet with the People's Bank of China. I talk about something similar, and I meet with the CFPB here, and it's similar. It's similar. I know that sounds weird, but it's more similar than not. And by the way, I think that's great. I think that's great. But I also know that as we think about the use of data and information, we need to tread carefully in that area. I think what we don't want to do is roll something out that we haven't fully tested and understood what the second and third order effects might be. Because there are always second and third order effects. You in this room know that better than anybody else. At least I sure hope. So what I think responsible companies and responsible policymakers need to do is figure out what is the sandbox that you in which you can play in and explore. And I think actually some of the agencies are doing that, and around the world they are doing more and more of that. So we can say, for instance, let's use this data and information to extend loans to consumers who can't get it right now and go to payday lenders or worse, out on the streets. But let's be careful about it. What does it mean to use their data and information? What's the privacy considerations that we need to look at? How do you responsibly lend to somebody so that they can pay that back? For instance, I'll just give you an example. We bought a company recently called TO Networks. It's a bill pay company. It's got about 14 million people or so use it. It's predominant in low and middle income neighborhoods. Kiosks that people can pay their bills, or they can do it online. So we can save them, and we have saved over time about a little over $800 million for them through electronifying what they would have had to do in the physical world. But to me, the more interesting thing is seeing the data and information on how responsible is somebody in paying their bills. Because let's say you're on the platform and I see you're paying your bills all the time and you lose your job. You lose your job, it just happens, but you're a responsible individual. So how can we help you in that time frame that you're having issues? And we got to think about that, right? Because how do we use data and information in a responsible way? But if I know you're a responsible individual, and most people, and there have been academic studies on this, you probably let them, but no, you didn't, but I know you will at some point, where most lower income individuals, it isn't that their bills are higher than their income coming in. It is that the time frames are not aligned. And so you get yourself in trouble because the revenue coming in does not always equate to the expenses that need to go out. And I think there's somebody in the audience will. Yeah, all the time, right? I think of Americans, it's something like 50% of Americans only have $400 of savings. That is a huge wake-up call here, because $400 savings is nothing. Your car breaks down, a medical thing, whatever it may be. Like, how do you get by in that emergency? But if somebody knows you, and how do we know somebody? It used to be, we used to all be in the same neighborhood, and we used to all know each other, and it was like, the old-fashioned days and all that, but those old-fashioned days are not there anymore. Like, it's here today what we have. So the way we know people really is through data and information, I think. It's got to be used responsibly, and everyone has to trust that that's going to go on. There's a lot of fear about unknowns and that kind of thing. But if I know you and can responsibly lend you that money to get you through that inconsistency in cash flow, incredible value add. Same with working capital on small businesses, exactly the same. And it matters to them. It really matters. And we've seen that in the data and the results that come in. So I do think a partnership and a willingness to lean in together on that, I actually believe can make a huge difference in the populations that most need it and are most upended in what's happening in our world today.
Great. This is fantastic. I know that there will be some questions here in the audience, and if you do have questions, feel free to raise your hand. And Jackson Mueller.
Hey, thanks, Chris. Jackson Mueller with the Milken Institute. Dan, thank you for showing up. I'd be interested, you talked about LMI communities. We're engaged in an initiative called the Partnership for Lending in Underserved Markets. We're looking at enhancing capital to underserved small businesses. In every meeting and roundtable we've held on these issues, the one thing that constantly comes up is we don't know what's out there. Right? We don't know the various sources. We go to the bank, we get declined, and that's it. So how does PayPal, especially with its working capital program, effectively promote itself in these LMI communities so that these people understand what they're getting into and what products are beneficial to their needs? Thank you.
Yeah, thank you. And thank you for all the work that you guys are doing on that. Well, I think PayPal can do like a better job marketing. We have so many things to work on. So I'm not going to really talk about PayPal on it because I think it's interesting, but that misses the Uber point, which is how do we actually get information? Because it wouldn't necessarily just have to be about PayPal. It could be about any one of a number of alternatives that are out there. There are so many actual tax breaks that lower income individuals could have that they don't know about that could help them tremendously. So I do think, again, I think local government, I've talked to a couple of different senators about this and congressmen. I think we need to figure out how do we get the message. There are alternatives. They're not wide enough yet. They're not broad enough yet, because there's not enough information. But there will be a lot of information and data on everybody. It is what's going to happen. So the question is, how do we use it responsibly? And then how do we assure that that data and information gets to the person that we can help them in effective ways? There are a lot of new technology ways that we should be able to go do. More lower income individuals have smartphones than higher income because it's their only device, right? So they don't have iPads and laptops and that kind of. They just have a cell phone. But we know all that information. We should be able to message and tell them based on information that we have to get them individualized. I mean, not even knowledge in general, but individualized thing. One of the things that I envision, I really like about the idea of software is, can it help somebody to understand their financial health better? So I don't know how many of you have ever kept a budget. I'm sure some of you have, but probably none of you really. Because it's very difficult to go do. You got to write down every single thing, and you got to remember it, and then you got to aggregate it. But if you're on a platform and software can do that for you and categorize your spend and tell how much you've done here, and then, okay, wait, I want to actually save. Maybe we can even incent, And there are a lot of different countries around the world that actually do sweepstakes around savings. I know it sounds crazy, but it's just basically it incents people to save. Nobody ever gets less. You're not putting money in, but you could get more, and that's what that sweepstakes is about. So it's no risk, possible upside, but it incents people to save, which is a benefit overall to get people through these things. So are there ways that we can incent people to save through software? Maybe tell them, like, you did too much on entertainment this month. You know, I want to put away $20 a month towards this particular goal. I think we have the opportunity to go and do that much more efficiently, but we gotta try and work this one together. I don't think it really works well when one company tries to do it, because it's a very small segment of the overall issue that goes on.
Yeah, and precisely, you know, to that point, it appears to me that you need an opt-in and a buy-in across both industry, and then obviously you're going to need your partners here in DC from regulatory agencies and also from Congress. I've heard some really interesting ideas just now from you. I've heard about sweepstakes. I've heard about tax incentives particularly. I've heard regulatory sandboxes to experiment and to get information to make sure that new technologies are ready for prime time as they're being developed. You know, if you're going to provide some, I guess, last thoughts about what immediate steps, you know, could be taken, I'm sure lots of folks, I would personally be curious to hear, you know, what you would have in mind in terms of how people can begin to, again, move us a little bit further and make us more competitive, both internationally, but also to democratize financial services here at home. You know, are there one or two key things that you think we should at least start to think about and to consider?
Well, I think just at a philosophical level initially, I think the private and public sectors really need to be much closer partners than ever before. I think technology is driving that. I think it's very, very important in so many areas. Cybersecurity. And you know, I'm the chairman of the board of Symantec, which is the largest cybersecurity software player in the world. Just how we work with private industry and the public sector in cybersecurity, that partnership has to evolve and should evolve, and it's very healthy, but the more we do of these things in financial services, the same thing. Because it's not the domain of any of us right now. It's now the domain of both of us. And we have to really work closely together, because I feel we sub-optimize by doing it individually. And obviously government is way bigger than any one company, but I think together we can be quite powerful in it. And I actually believe we can make steps. I think, you know, I'm a business person. I think about plans, and I think about what are the goals and objectives that we want to get to and how do we get there. But I do think we as a country can say, okay, how do we want to take this underserved population and start to serve it better? How do we go and do that? What would be the steps? And let's experiment in a couple of neighborhoods and start that. We're trying to do it as a company. Different parts of government are trying to do it as government. I do think together can be quite a powerful type of thing, and I do think convening some of the leading players around that would be something that government could do, and it would, I think, be powerful. And again, it transcends, at least for me. I think of these things a little bit as it's a very noble mission for all of us, and it transcends values or belief sets around different things. I just think it's the right thing to do for our country, and I think it's solvable. That's the other thing.
All right. Well, thank you so much for coming, and thank you for everyone else for showing up as well.
Everybody.
This has been a wonderful conversation, and I guess I'll end off there. But thanks so much.
Thank you.